Welcome to Home Buying Made Easy, the podcast where we pull back the curtain on mortgages, real estate, and everything the big banks hope you never figure out. Michael Dindy is a licensed mortgage loan officer with Edge Home Finance, and I'm Rachel, co-host and producer of the show. Every episode, Michael and I break down the stuff that actually matters without the jargon. This show is designed for everyday people like you and I to learn the home buying process so you can buy smarter, save more, and stop leaving money on the table. Now let's dive into today's episode.
Welcome to Home Buying Made Easy. I am Michael, and I have Rachel with me today, and we are discussing escrow and what that word means. And it has a double meaning. Did you know that? It actually has more meanings, but it has a double meaning.
What's the double meaning?
The double meaning. I knew you were going to ask. So I think I kind of prompted that. But an escrow is two different types of things. One is when you get ready to close on a house, they call it escrow. In some states, you open up escrow. That's what it's called. You're opening up the closing file called escrow. And so when you open up escrow, that means that you're opening up a closing file that will be closing in the future. Meaning number one. Meaning number two is an escrow account, which a mortgage company holds so that they collect money for your principal, your interest, for your taxes, for your insurance, maybe for whatever else, PMI, mortgage insurance. They'll put all that, they put that into what's called an escrow account. They take the principal and interest and they pay the mortgage payment. And then they put the rest of the money in this escrow account, this account like your very own bank account. And they track that money throughout the year. And then when the tax bill comes in, it comes to the mortgage company. And then the mortgage company writes a check and sends it to the to the local tax municipality. When the homeowner's insurance comes due, the whole bill is turned into the mortgage company. And when it's turned into the mortgage company pays the insurance bill. If those numbers go up or they go down, then your escrow account would then be adjusted the following year after they've done escrow, what's called an escrow analysis. So that's what the two types of escrow, what we call escrow, are. And what other questions do you have about escrow?
Let's see. What question? Is it the same payment every year, or is it like a different?
Well, it could be a different payment. That part could be your principal and interest is always going to be the same. If you have a fixed mortgage, a 30-year fixed mortgage or a 15-year fixed mortgage, your principal and interest is always the same because that's how it's amortized. That's how it's spread out over that period of time. But your taxes and insurance, they could go up and down depending on if taxes go up or taxes come down, or your homeowner's insurance goes up or you get a different insurance company and the payment comes down. Then those escrow amounts would adjust accordingly. They do what's called an annual audit, an escrow audit.
Yeah. And
when they do that audit, they make the adjustments to the actual escrow amount that's being collected.
Okay. So do you have to have an escrow account, or can you like kind of opt out of it?
There are mortgage companies that will allow you to opt out of it. Okay. There's some that will not, but there are some that will let you opt out of it. And it also may have to do with how much money put down. Mm-hmm. So if they feel like it's a higher risk, then some lenders, mortgage companies will require you to have an escrow account.
Yeah. So in that case, then you would have to come up with the money when those taxes come, right?
You mean if you opt out?
Yeah, if you opt out.
Yeah. If you opt out, then when you opt out, it will prompt you. The tax bill comes in, let's say, December, in January, or whenever it's due, February, you would make that payment. Mm-hmm. And same thing's true for homeowners insurance.
Yeah. Okay. So who sets that account up?
The mortgage company does.
The mortgage. Okay.
Yep.
Oh, you just work with them and they.
Yep.
magic pixie dust and they
Yep.
put it all together.
Yeah, and I tell clients if clients are good. I don't know what that was. Anyway, if clients are good and good with money, then I'll tell them, you know what, you could take that money and set aside every month yourself, or set aside a lump sum to be able to pay that next year, and you could put that into a high yield savings account, and you could draw interest on it. The mortgage company is not allowed to do that. They just put it in this escrow account. They have to leave it there. That's what's required. So
that's what we got.
So if you have more questions about escrow or escrow accounts or closings or anything to do with a real estate transaction, that's what Home Buying Made Easy is for. We'll be glad to answer any questions. All you have to do is hit me up, and well, don't hit me. That would be weird. But you can send me a message, and I'll be glad to answer any questions that you may have or help you with your next mortgage. See you next time.
That's a wrap on today's episode of Home Buying Made Easy. If you're ready to take your next step, our team is standing by. You can call or text us directly at 615-499-6335. You can also reach us at michael@dindyteam.com or check out the link in the show notes below. Whether you have one question or you're ready to go, we'll meet you right where you are. Thanks for joining us. From our team to you, let's make home buying easy.